Good morning and welcome to the BF Anderson Technical Report for December the 15th. Every morning when I come into the office, the first thing I do is I just look at the facts. What is going on with the markets? Now we can, watch television, we can talk to other people, we can make a lot of mistakes. And to me, the best thing to do is just look at the facts. So if there's a storm brewing, and you're watching the Weather Channel, and you see that rain is coming, you're going to get your umbrella out or you're going to put your rain jacket on. Now, if that weather report says, hey, this is turning into a hurricane, well, you've got to take defensive action. You've got to make decisions that day to deal with the inclement weather. Well, let's take a look here at the stock market. Now, what I've set up here is the Standard & Poor's 500 index. I'm using a monthly chart of moving averages only, the 8-month, the 10-month, and the 12-month moving average. I go back to 2007, 2008 financial crisis. Now you can see here very clearly that if you came in the morning and you were seeing this type of formation, you might want to get your umbrella out. In fact, you might want to even think you might be dealing with a hurricane. So the facts are, when you look at these moving averages, you can see the deterioration in the markets. And the market is discounting. It's not dealing with what's happened today or yesterday. The market's looking out 6 months, 9 months, 3 years, who knows. But the market does discount the future. So let's go ahead and look at a graph as to where we are today. The weather's clear. The moving averages take out all the noise. It gets very clear here. There is no reason to get your umbrella out right now. So in other words, we're seeing the same 8-month, 10-month, 12-month moving averages, very smooth, steady uptrend. Now remember, and we're going to talk a little bit about this in the next slide or two, easy markets are followed by difficult markets. Difficult markets are followed by, easy markets. So in other words, there's going to be an ebb and a flow. There's going to be good times and there's going to be bad times. But as I look at this graph right now, it's telling me that the market is in a very constructive bull cycle. Now, I did want to mention gold real quick, just to kind of take a look at gold. If you use the same moving averages, the same thing, I would be very concerned if I was investing in gold right now. This looks a lot like, now this is 2017, this is current. And my opinion is that I think gold may be entering a long-term bear market. So like 07, 08, gold looks kind of like that. Now I did want to mention the rotation in the market. The market is definitely going through a rotation. And one thing I look at when I look at an individual stock, now this is Micron Technology, which is semiconductors. And, for this year, for 2017, pretty much the semiconductors and the technology stocks, hardware, software stocks, have pretty much led this market. Now, what can be the sign of a top? Well, when you have a drop in the price that is the biggest drop of the year. Well, if you look at Micron here, back after Thanksgiving, we got this really big drop, which was the biggest drop of the entire year. Also, did the drop come after an extensive move up? Well, you have to say yes to that as well. And volume is something to pay attention to as well. When volume picks up to this magnitude, and we're talking about what we call skyscraper volume, this is not your Aunt Sue selling Micron. This is large institutional selling. Now, large institutions, we're talking billions of dollars, hundreds of billions of dollars, billions of shares. So when an institution starts selling, it takes them a while. So the problem comes in where the thinking could be, well, this drop is a buying opportunity. Maybe it is, maybe it isn't. But the point is that this stock could go into a sideways move. I don't think the bottom's going to fall out of it, and I don't think it's going to turn around and run back up again. But 8 out of 10 of charts like this seem to fail. and it's just probabilities and possibilities. Now, Micron is a great company, but the stock is the stock. You've got heavy institutional selling here. I think I would move to the sideline on this one and just wait. Now, to show you where the money seems to be moving into, one area is financials. Now, here's a graph on Charles Schwab and Company. You can see here good institutional volume came in on the buy side, and the stock is in a strong uptrend. So with this rotation in the market, we're seeing the money moving more into financials, industrials, and retail. Now, I did want to mention one other graph here, and this is the NASDAQ. And I did want to mention here the crash of '87. This was a very, very difficult period. The NASDAQ went into a sideways box starting around 1986 and did not come out of that box until '91. There was a lot of rotation in here. I can remember clearly that, going into this box, the pharmaceuticals were pretty much one of the stronger areas, retail, things of that sort. But then when we broke out in 1991, it was all technology. It was Intel, Microsoft, Amazon.com, Yahoo, AOL. Now, I do want to mention this vertical line here. This was where one of the 7.5% rules that we've talked about in the past, where the S&P 500 crossed above its 35-week moving average by more than 7.5%. The move between this point and this point was 900%. So then if you realize here that the NASDAQ has just been moving sideways since 2000, and then we went into another consolidation phase here that was somewhat similar to the 87 through 91 phase. Now we're breaking out again. This is typical of a bull market. Now let's look at the top five. The main thing I want you to note about the top five is the dramatic change in the types of stocks that are now making the list. We run these numbers every week, and we're always surprised when we see new names, but this last couple of weeks has been quite dramatic. Here's First Solar. Again, who would think solar? But it is. It's number one on our list, in fact. We do own the stock. We owned this stock also back in 2007 and did quite well with it. It's a good company. They have some proprietary technology that is more of an industrial type of solar farm technology. Now, here's another stock that would kind of catch you off guard a little bit. We're not seeing any tech names at this time. HollyFrontier Corp. This is a energy stock. It is mainly a refiner of oil. You can see the strength of the uptrend. For some reason, we're starting to see strength in the energy area. Now, here's a retail stock, Michael Kors. Handbags, purses, shoes, clothes. This is retail. We're seeing a tremendous amount of strength here in Michael Kors. Now, here's another situation. This is a chemical company, Westlake Chemical. You can see the dramatic up move. These are all very positive uptrends, but you're not seeing the old names. Here's one old name, which is not performing as well as the others, YY, which is a Chinese software company. So in conclusion, what I'm saying is there's a lot of rotation right now. This is going to be a difficult period for many investors, including myself, where I have got to get off the names that appear to be topping and move on to what is improving and starting to show new strength. So if you have any questions, please give me a call.